Hello guys, today we will dive into the world of central banks, those institutions that hold the reins of monetary policy, wide and immense influence over economies and play a pivotal role in the Forex market. As we navigate through their functions and impact, we will uncover why they are so important and particularly crucial in times like now, when inflation looms large. So, first of all, have you asked your questions, what are central banks? Well, let's understand what central banks are. At their core, central banks are the guardians of the country's monetary policy, or the monetary system, as you prefer to call. They regulate the supply of money, they set the interest rates, and, of course, they act as the lender of the last resort to commercial banks. Essentially, they maintain stability and ensure the smooth functionality of the financial system. Now, how do they influence on the economy? Well, one of the primary tools is the monetary policy. By adjusting interest rates and controlling the money supply, central banks aim to achieve specific economic objectives, such as the price stability, the full employment, and the sustainable growth. Lowering interest rates stimulates borrowing and spending, while raising interest rates then curbs inflation, but might slow down the economic activity. Now, if you trade Forex, you may be looking, how can these impact into the Forex market? Well, moving on to the impact on the Forex market, central banks hold immense sway. Their decisions on interest rates and the monetary policy directly affect a currency value. For instance, let's say when a central bank raises interest rates, it attracts foreign capital, the so-called FDIs, foreign direct investors, strengthening the currency. Conversely, cutting the interest rates, it can weaken the currency as investors seek higher returns elsewhere. Additionally, central banks often intervene directly in the Forex market to stabilize the currency value or counter speculative pressures, like we've seen on the Bank of Japan in 2022. The crucial role in times of inflation right now. So let's address it. So let's say it's an elephant in the middle of the room, right? Inflation. Inflation refers to the sustained increase in the general price level of goods and services. It erodes purchasing power, disrupts economic planning, and it can lead to social unrest. Central banks play a critical role in combating inflation by adjusting monetary policy. When inflation rises, they may raise interest rates to cool down spending and keep prices in check. However, this balancing act requires carefully calibration to avoid stifling economic growth. So, in conclusion, central banks are the boss of the modern economy, while they immense influence over monetary policy and the financial system. The decision reverberate through the Forex market, shaping currency values and investor sentiments. As we navigate through times of growing inflation, their role becomes even more pronounced, as they strive to maintain stability and ensure the long-term health of the economy. So, thank you so much for joining us today on this exploration of the central bank and their impact on the economy and Forex markets. Remember, while the actions may seem, erratic, their effects ripple through our daily lives in profound ways. So thank you so much. Give us a thumbs up, share this video with your friend, and most importantly, subscribe to the channel.